Hi everybody, my name is Aaron Hendon. I am with Christine and Company at Keller Williams, and I really appreciate your coming by our video blog. Today I'm going to talk about market updates. I'm going to give you my sense of what's happening in the market, and in fact why I think we may be shifting from a seller's market to a buyer's market. Before I get to any of that, I'd like to show you the links below. There's one, if you're a seller, I would click on the home value report and get yourself a comparative, easy for me to say, a comparative market analysis for your home. And if I were a buyer, I'd ask you to click on the market snapshot, which will give you the most current, up-to-date information about homes in any area in the Puget Sound that you're interested in. So go ahead and click on one of those two links if you're a buyer or a seller and you'd like to get that information. Now, the market update. Seattle has enjoyed one of the strongest selling markets in its history. In fact, inventories have been at 12-year low. Businesses have been booming. The economy is booming here. People are moving in here from all over the country and, in fact, from overseas, from China, and buying up the limited available inventory, which low supply, high demand always creates an increase in price. So why do I think that's going to change in 2016? Well, there's a couple of signs, a couple of things that are worrying me. One is the stock market. The stock market is down 10% from its 2015 high. Amazon is down 15% from December. Microsoft is down 10% since December. The Fed raised interest rates for the first time in, 7, 8 years. The economy in China is either collapsing or stalling, depending on who you ask, but in any event, it's certainly slowing down. Those buyers may be going away. The collapse in oil prices and the continued decline continues to put a downward pressure on the economy. In addition, there's some signs that venture capital is drying up, which is particularly important in our region. So any of those items by itself, or maybe even two of them by themselves, okay, market could probably withstand it. All of them together, on top of which real estate is cyclical. Things don't go up forever. Would not be unusual to have a downturn, a small correction in the market. So all those things together tend to indicate, you know what? The market may in fact be changing. In fact, I'd like to show you this graph. And this graph shows the green line is what buyers paid for houses over the last year. And if you notice, since October, it's been relatively flat. But look at the red line. That's what sellers are asking for their houses. Sellers have been demanding more and more for their houses while buyers have not been meeting that demand. Well, that gap, that delta, tends to precede a shift in the market. All those things together lead me to think, you know what, I would be cautious about expecting everything to be the same as last year. What does it mean to you? Well, if you're a buyer, I would probably recommend that you hang out. If you can wait a few months, I would. I'd wait to see how this shakes out if you could. If you can't, you can't. But if you could wait, I would probably recommend that you do wait. And if you're a seller, the traditional thinking is I'll wait to spring to list my house. Big mistake right now. I would list that house now. December was one of the busiest months we've had all last year. And in fact, there's still pent-up demand. We're still seeing multiple offer situations. I would take advantage of that. I'd get that house to the market as soon as possible. Now, everyone's case is different. Everyone's different. If you need a private, personal evaluation of your circumstances and your situation, please give me a call. We'll come by. We'll take a look at the value of your house. We'll examine your situation, and we'll give you the best recommendation for what you're dealing with now. Okay, that's all I got for today. I appreciate you taking a couple of minutes with me. I look forward to seeing you next time. Thanks so much.